Michael Burry just bought into Alibaba and JD.com, while Warren Buffett, on the other hand, just sold out of his TSMC position. What the heck is happening? So in this video, we'll observe these two super investors, what their positions are, and what is my read of the entire situation. Of course, as always, don't forget to smash the cute little like button on your way out. Now, I think this was a very hot tweet that essentially garnered quite a lot of views, and people were just sharing this tweet around, especially in my own community. It actually garnered around 63.8 thousand views on Twitter. And long story short, this is just a breakdown of Michael Burry's portfolio based on Q4 positioning last year. So you can see that the first position itself, it caught so much attention. Look at this stock here. Alibaba Group Holdings, 9.46% of the portfolio. And the reported price, $88.09 at 50,000 shares. So I've seen many commentaries, especially people discussing, look at Michael Burry's entry price at $88. And based on the current adjustments of what the market is currently trading, it is speculated that Michael Burry is actually up 18.31%. I think firstly, I would just like to correct this misconception here. This $88.09 is not necessarily Michael Burry's entry price. This $88 reported price is actually the last closing price of Alibaba based on Q4 of last year, because this is essentially the report to show the 13F filing of these various super investors. So if you were to just look back based on the closing of Alibaba on 30th of December, 30th of December, if you follow my cursor, it's $88.09. So that was Alibaba's trading price at the end of that year or end of that quarter, which is why this is the reported price. But I think just to really look through Michael Burry's potential entry price, because this is based on Q4, if we start from 1st of October or 3rd of October in this case, you can see that 3rd of October is around this range and it goes all the way to $88. So the highest price that he could have potentially entered was merely maybe 94, 95, and the lowest price he could have entered was right after that Party Congress kerfuffle. It was probably trading at around $60 to $61. So this is the potential range of his entry, 60 to around 94. And based on today's current price, and even if you look at pre-market of 103, Michael Burry is definitely up on his Alibaba position, regardless of at what point did he buy. And if he dollar cost average, if he go into tranches, then he definitely would be able to lower his average price much more. Because in Q4 of last year, that was essentially the quote-unquote momentary bottom for many of these Chinese names. But I think the more peculiar and more interesting observation is on top of Alibaba, he actually also added to his JD position. And for those of you who don't know, JD, Alibaba, and Pinduoduo is actually the three kingsmen of the e-commerce industry of China. So by betting on the JD.com and also Alibaba, and if you look at the percentage of the exposure, JD is 9%, Alibaba is 9.5%. So it makes up around 18.5% of their portfolio. So in this perspective, you can really kind of speculate what is his entire thesis on why did he specifically buy into these two stocks or these two companies. To just keep you up to speed, if you look back in the lows of where Alibaba was trading at, I think it was 25th October 2022. If I'm not wrong, these 2 days are actually Mondays and Tuesdays respectively. And this was right after the 20th Party Congress that was conducted the prior weekend, where Chairman Xi essentially consolidated power and he abolished the entire third term limitation to any subsequent Chinese presidency. And from there on, essentially investors were bailing out, saying that China has lost its way, Chairman Xi and his cabinet has lost its way. And there was a lot of narrative spinning saying that there was a lot of yes men, China will have a lack of check and balance, etc., etc. So from there on, there was this complete flight and complete destruction in investors' confidence, which explains the share price itself. And from the Party Congress itself, there was literally zero hints into when this entire zero COVID policy is going to ease, which probably also explains why investors are slowly losing confidence in China as an investable universe of asset classes. But I think that's it. Fast forward into November and December, we suddenly start getting more and more good news saying that China is finally trying to pivot their stance in terms of zero COVID. And that was also when you see this monstrous rally. And from Alibaba's lows of $60, it actually went up around 90% of highs of 120. And that was a 100% increase. And for those of you who caught the bottom, 2 thumbs up to you. And I think long story short, if to speculate what Michael Burry's thesis is, he's essentially speculating or betting on the reopening of China and the consumption itself. Which then begs the question, why did he not bet on Pinduoduo? Because if you look at Pinduoduo's stock price, actually Pinduoduo has been holding up relatively well compared to his Alibaba and JD.com counterparts. But I think the nuance here is Pinduoduo actually targets the lower segment of the market, while JD and Alibaba is more positioned towards the higher segment. So if we are really thinking that China's economy is going to reopen and it's going to be booming, etc., people are going to start consuming again, then it makes sense for why Michael Burry actually puts his money backing both Alibaba and JD.com. And I think one more data point that I would like to point out, in case you have forgotten, and for those of you who don't actually follow Michael Burry that frequently. So late last year, Michael Burry actually tweeted out a few bullish tweets around Chinese and the Hong Kong market. So I'll just read you through some of the tweets that he mentioned before. So I think this was back in November or December last year. Yes, this was actually posted on December 2022. He tweeted, "As for me, I like Hong Kong." And Burry's tweet actually coincides with the stellar reopening of the Hang Seng Index on Monday, rising over 3%, as China actually eased some of its COVID restrictions, easing testing rules in some cities. And I think now, if you were to triangulate back to his portfolio position, you can clearly see he's essentially pumping the stock. And from this very rudimentary understanding, he probably already had positions in probably Alibaba and JD.com, which is why he said that he liked Hong Kong. So on top of just tweeting out his fondness towards the Hong Kong market, he actually provided a very interesting data point for many investors to consider as well. But of course, just keep in mind that he's probably biased because he probably had an initial position in Alibaba and JD, and he might be quote-unquote pumping the stock because he was bullish to begin with. So in terms of valuations, Burry had then tweeted his take on the index, explaining how Hang Seng valuations have dropped significantly compared with figures in 1997. So he observed that the Hang Seng index recently hit levels similar to where it was 25 years ago. However, valuations have declined considerably, with earnings falling 7 times compared with 25 times back then, despite GDP ballooning by 18 times. Long story short, he's just saying that comparing 1997 to 2022, GDP has 18x, while PE ratio, in this case the valuation metric that's using, collapsed from 25 times to 7 times. So which is why many people say that if you look at the Hang Seng Index, for very, very early on investors, you guys probably experienced a lost decade or two. And for those of you who really bought in extremely early on, it essentially moved nowhere. And the biggest driver for this zero returns was really this valuation collapse. So in this case, in layman terms, just means that even if the underlying companies in the index 4x their earnings, meaning from maybe 100 million to 400 million, if the PE actually shrunk by 3/4, you're actually back to the same index price again. But I think I'll leave it up to you to decide whether you think a 7 times PE for the entire index, is it a fair price or not. But I think in retrospect at least, when he tweeted that back in December of last year, the market was still a sleeping giant and it hasn't really reacted to this huge monstrous run. It's probably quite obvious that a 7 times PE on Hang Seng Index was pretty undervalued. So he then went on to substantiate with this. Meet the new boss, same as the old boss. The Hang Seng recently hit 1997 levels, 25 years, yet GDP multiplied 18 times during that time. 1997 valuations were 20 times earnings, 10 times EV sales, 3 times tangible book. Now 711, 7 times PE, 1 times EV sales, and 1 times tangible book. So I'll leave it up to you to decide whether you think the Hong Kong market is investable or not. But I think one last important point that I want to drive home before I actually end off this commentary of how Michael Burry is essentially buying into Alibaba and JD.com, I'd just like to point you to his track record just back in 2021. You can see that he has a lot of buys and sells. So when he sells, he probably just wipes out his entire portfolio because he just sells everything. So this is not the first time, by the way. Q2 of 2021, he sold everything and then he bought in a new position. Q3 of 2021, he sold everything again and bought in new positions. And you get the story. It's always the same kind of dynamics. So to me, whether you call Michael Burry a swing trader or an investor, I think that's up to you to make that value judgment. But it really does feel to me that he has a fundamental thesis, an underlying thesis, and he's essentially just swing trading in and out of stocks. So in this recent filing, yes, he did buy into Alibaba and JD.com, and it's a pretty substantial position. It's around 18% of the portfolio. But I wouldn't be surprised if Q1 of 2023, it's reported that he actually sold out of both positions, because you can see that it's the same story playing out again. Whether he thinks that Alibaba and JD at today's price, is it fairly valued or is it overvalued? I think we will only know in hindsight when 2023 Q1 13F season comes out again. But to me, I think for many current back holders or potential investors that want to invest into Alibaba, unless you can turn back time and go back into Q4 of last year and start buying, if not, now, if you're asking me, oh, whether is Alibaba cheap or not, whether you can buy the stock or not, please do your own due diligence. Of course, personally, I'm extremely biased to this entire Chinese story, e-commerce story, and how Alibaba is still extremely undervalued. If you look at all the mainstream metrics you're going to use, I think the forward PE of Alibaba is probably closer to like 12 or 13 times now. So I don't think it's a fair valuation to pay for such a crazy compounder. For the last decade or so, by compounding, I mean compounding its revenue and profits, not by the stock chart itself. Because if you do really just look back, just pull it out to the max timeline, Alibaba actually IPO'd in 2014, and that's close to 10 years now, 9 years, and the stock only returned 11%. So for early Alibaba investors, it looks like a bleak picture, but I think the market is probably quite mispriced right now, so I still stay invested. I hope I provide some perspective into Michael Burry's entry into Alibaba, and with that, I'll see you in the next video, but more importantly, I will finally see you on the moon. Goodbye!